Hello everyone and welcome back to another Quora Inner Cycle video, or sponsored by, let's say. And we're going, of course, to be taking a look at BTC long and short term. What has been happening, of course, lately, guarantees some annotation, and we're also going to have a quick look on Sol, which was the winner of the vote for this time's video, and it's been probably over a month since the last video, so this is a needed update to be fair. So without further ado, either way, some cryptos, not investment advice. Let's dive into the BTC cyclical analysis just a tiny bit first, then BTC quickly and Sol. So as you may remember, we've talked about this long-term count for a while and the cyclical analysis. The idea has been for an actual correction, an ABC, and then a crash, supposedly. And I have put down a few days here for some sort of events. Judging by the previous correction over here, that lasted 544 bars. We're on the daily. Supposedly around these days, we should be looking at a huge crash. It's not happening. And will it happen? That is another question. And if we look at the low to low here, as well, low to the halving as well, from that low, right? A few days actually took, it's like 54, 55, it's like a couple of months, I would say, extra from that low to the halving day, right? So the next 2 months are going to be very important until the halving day. If you actually don't see an actual crash, you know, and without that even going below the previous low, that means that very likely that the high is in, but it's the low. So, but this is also going to depend on other things. And one of those things is what's going to happen in the next couple of weeks as well. The truth is that we are in somewhat of a bubble if we look at the traditional markets as well. Everything is being driven by the AI sort of burst, with NVIDIA, of course, reporting good earnings a few days back. Also, potentially likely to drive prices higher. Of course, the main driver for BTC is not NVIDIA. It is the actual halving, and that has been known to be priced in before the actual halving date, which means that there is higher likelihood that we're going to get a crash closer to that date, okay, rather than any other time. That means that from a market perspective, we could expect a crash. And when I say crash, I don't mean we're going to go down 80 90%, right, guys? Because this is also becoming less likely. I mean, for this count to be correct, is becoming less likely, especially at these levels. What I mean is that a 30 to 40, I mean, if you get a market correction, like very typical corrections around 15 to 20% in specifically at these levels, for NVIDIA as well, it may be even 30, would just be a simple pullback. Just think about this for a second. So we could be looking at anywhere between 50% for BTC. If that's going to be like driving the traditional markets that much lower, you can expect that effect on the cryptocurrency markets to be much larger. Well, so that's one thing to remember. So what do we expect in the traditional stock markets is the question. Where I personally don't think the stock markets are going to stop moving higher until we get at least the first rate cut. Right? Because this is what happens typically when we get the rate cut, things go off. But that does not necessarily mean we cannot expect pullbacks. And as I said, at this particular scale, the pullback could be anything that is going to drive stocks down 10, 15, 20, 30%. So you can expect that also to happen for BTC. Now, from that perspective, from a cyclical perspective, and looking at the previous cycles and all that stuff, nothing matches so far. Okay, so this seems to be its own thing. We don't always have to have parallels, and especially when they start diverging, you understand that this is a new thing happening, and the next bull run, maybe we can start comparing that year with, whatever is happening. Now, with that said, I think the expectations for Fed to cut rates are getting pushed back and pushed back. Markets still expect them to come sooner, but as you probably know that they're not coming as soon as they think always, but still the markets are not stopping. So from a macro perspective, everything seems to be lined up for further upside, unless if we start getting like bad numbers like bad GDP, higher CPI, consumer data that they sort of signal a slowdown. But regardless, like from that perspective, everything seems to be looking at higher prices. From a technical perspective, okay, we are still moving up impulsively. Okay, impulsively. That means that, and without actually falling below 31.28, that will still be impulsive to the upside. Okay, but I mark these dates here, 13th of April as well, around that territory as well, and the half a day now is very important. Maybe we're gonna get a correction to complete that leg to the downside, then go one more time up. Maybe we're not gonna do new highs, who knows? And then summer we're gonna dump before. I mean, after the Fed believes the dot plot says that June is when they're gonna start cutting rates, right? Last time I checked, June. So you know what that could mean. Until June, we might just be going up, and depends on how we're gonna move from now on. If momentum continues, it's very likely we'll do new highs. If momentum doesn't continue, maybe we're just gonna fluctuate here for a long period until we have more clarity from the Fed or the rest of the markets. Now, you might think, why have not changed that count? Well, I have not changed that count, despite the fact I should, and my typical reaction would have been to change that count, because I typically make the changes, and my Discord group knows that, of course, when we break 79, we are above 79%, right? You might say, why am I not making that change? I'm not making that change because, technically speaking, we have just one more wave up. Okay, so yes, we are above the technical level. I typically make changes, but these are my rules, not yours, right? So I'm gonna still wait to get that last leg to the upside, because there is one more leg up from what I can see, and then decide based on the momentum and the volumes that we're gonna get that flowing. Then I'm gonna decide whether I want to make that change or not. And just for the record, if I will make that change, because I see a lot of people calling this 1, 2, 3, and 4, and that is the 5th. This is not the right count. Okay, I see a lot of people do that. Why? You might say, oh, without not being the right count, that doesn't necessarily mean it's not going to happen. It could happen, but there is less probability of this. 1, 2, 3, 4, 5. And that would be a correction, right? And that will still be wave 1 and 2 and 3, 4, and 5, rather than the 5th. Obviously, just to make that distinction, 1, 2, 3, 4, and 5 could also mean that's going to be 1, 2, 3, 4, and 5 with an extended 5th. However, what I'm telling you is that if the bottom is in, there is more potential for upside, because this is probably wave 1 and this is wave 2, rather than, I repeat, 1, 2, 3, 4, and 5. Why? Because these 4 and these 2 don't like much together. They don't have the right look. I'm not saying that this second and this supposedly 4th do much, but they are much, much better. Okay, and that is important for context. Why? Because this is a very deep correction, yeah, and this is very shallow. This is one of the alternation guidelines. And the other one is the one has to be sharp and the other one has to be sideways. You can say this is sharp, by the way. You can kind of say this is sideways with an end that is very sharp. So also let's say, so 3/4 of the two guidelines, let's say, are spot on. And if you look at it, I mean, the duration from that top down here of this correction, the duration is, let me just tell you this, there are 260 bars, right? And then you have the duration from this to this, 260 and 71. So you think about it will have 3.5x, right? But then, if you look at this and the depth, you have 372 bars, which is of course much more convenient with relation to this in terms of time, right? In terms of time, this is much bigger, but no relation at all. Very off in terms of depth, because both are deep. And how do we measure that? Look at the depth of the supposed wave 3. It's more than 50%. I mean, having like a 55% correction in wave 4 and a 85% correction in a wave 2, it's much less unlikely than having a wave 2 correction at 85 and a wave 3 correction at around 35. 35 and 85, 110. It's much closer to the 100, if you know what I mean. So, with all that being taken in, hopefully, let's jump to the BTC count. And this is the count. And we talked about the 79. As I said, we are above the 79, okay? And I still look at this expectation. And I repeat, my other expectation, if the low is in for now, okay, this is wave 1 and 2. This is wave 3. And we're going to get a 4 and then 5. The fourth, either way, any count you're going to look, I still expect one more wave to the upside here, right? Like from pattern perspectives in the short term. Now, if that correction as you can see, this correction, and as I was saying, it could be a wave 4. We would not know whether this is a wave 4 or the reversal, i.e. a beginning of wave 1 or wave A, okay, until we break below 3140. If we break 3140 after we do a fifth wave up, because currently, as I say, we have an ABC still, but also it can be a 3 and a 4, 1, 2, 3, 4, right? It is going to depend on the depth of wave 4. So if we stay above wave A, it will be a wave 1. So you will have 1, 2, 3, 4, and then we expect the fifth. Okay? I will tell you something in a second. If we go as deep to break below wave A, then that would probably mean this is an ABC. We ended up here and we could move lower for that count. Now, what is that? Something I wanted to tell you. If this is going to be indeed the 1, 2, 3, 4, and 5, it will really, if we end the fifth wave up below the previous high, okay, below the previous high, I repeat, then the scenario that I just told you about that I am more likely going to apply, i.e. this is all of it is wave 1 and wave 2, is going to be more likely. And why is it going to be more likely? Because when you have 5 waves going up without breaking the fresh high, to break fresh high means that after the correction, you have to go back up. That means we're going to get the 3, the 4, and the 5, so much more upside. But if we go and we do 5 waves up and breaking above with a fifth wave, that is going to be quite risky because we might just stop that new territory and then crash. Okay, so all of these to be taken and to be followed over the next few weeks and months. Now, the short term, just quickly on that one as well. Look, let me just go down on the one. Perhaps maybe even not the one. But anyway, as I was saying before, I'm still looking at another wave up, right? Because it looks like it wants to do one more wave up. So this is either A and B or 1 and 2. And then you have 1, 2, 3, 4, and 1, 2, 3, 4, and 5. So I'm still expecting one more wave up here in the short term to either finish wave C of B and correct, or potentially, for these to also be something like, 1, 2, and I would probably just say, I mean, you could still have 3 and 4, but you want to correct, match these 4 with these 2? No. So I would probably just say that It might be 1, 2, 3, 4, and 5. That's going to be where our 3 finishes. Then we might get a 4 that is going to be more proper for this correction in wave 2. Okay. Now, with that being said, of course, there is like several other counts. Okay. That, I mean, you could say that this is 1 and this is 2, and then you have 1 and a very deep correction, 92%, 1, 2, and 3, 4, and 5. Okay, that's likely. But I mean, what is the likelihood of having that leg going up being like what we're expected to be in like 1 and 2 and 99% correction in 2? It's highly unlikely. Triangle, not likely either, because I mean, this is like a more of a sideways correction, you know, rather than anything else. Plus, if it were a triangle, you have a descending triangle here. How are you going up afterwards? You know, so a lot of things just don't make sense. So, with that said, look, I am looking at this as 1, 2, 3, 4, and 5. Again, I'm not thinking that we're going to get a triangle here for the same reason as I talked about the larger triangle, the potential, because this is more like a descending sort of idea. However, A, B, and 1, 2, 3, perhaps 4 and 5 would be possible as a flat, I suppose, unless if the wave 4 it looks bigger, actually maybe not likely anymore. But what else could be the case here is ABC, ABC, 1, 2, 3, 4, 5 for a W. Maybe we're gonna get an X here and then a Y. Okay, so flat, flat, and something else in Y for a sideways wave 4. But as I look at it, you know, this is an ABC. This would be perfect for like a triangle, given that you have a sharp correction here or whatever you want to call it. However, the issue is that this is very shallow and sharp, so that has to be sideways and deep. However, the issue is that we're losing its depth because we keep consolidate in this territory. So there is also potential for that to be the end of it, and that starts a new leg to the downside because that wave 4 matches more with this wave 2. But the issue I do have with this is that, you know, this. Okay, it's just not from what I remember. Actually, let's do a quick test to see if we can have an open diagonal here. So if this is my 3, my first, sorry, my third, yeah, I cannot have the third because 1 is bigger than 3. So that is the issue I have. Cannot, that is ABC, ABC can be considered, yeah. And then you've got 1, 2, 3, 4, and 5 potentially. You know, I might be the flat, and then who knows. Anyway, the short term is a bit volatile, to be fair. We are getting tighter and tighter here, to be honest. So a breakout can be expected either to the downside or to the upside. I wouldn't be surprised if we go down to around 48 to just tap that wave 4, do that wave 4. On a different note, let's not forget, maybe all of this is wave 1 indeed. And we're going to get wave 2 here, and we're going to go higher. So there is a lot of things at play. That's why I'll have to pay attention, both short term and long term. Now, I'm going to go to Sol. And I will present you, I don't know if we did Sol anytime soon, but soon, actually, no, we never did, but I'm just not sure if we did Sol at all. Anyway, the bottom is in at Sol, right? This is 1, W, X, and Y, you want to call this. You want to call this an ABC, a 1 to 3, or to 6, whatever, it doesn't matter. The bottom is in. And this, by the way that this looks, 1 and 2. As a running flat. That's why we have this extended wave 3, because running flats lead to good momentum in wave 3. We came straight up and accelerated above that base channel. First rejection, rejection to the upside. Probably I expect W, X, and Y here. Okay, but maybe this is also gonna turn into something like of a longer term thing. We're gonna be fluctuating here for a bit, because if you look at the correction, the correction I have in wave 2, this lasts like 226 bars. So we can expect this, of course, to be around that area as well, without necessarily meaning that we'll have to do the same time, but they should match, okay? Time-wise and time-wise should be similar, and like length-wise, depth-wise, one should be shallow, the other one should be deep. So this one, if we look at this wave 2, it's very shallow, given, of course, we come and we'll have a running flat here around 38%. So the correction wave 4 is expected to be deep. That means that we can expect prices to go back to around 60, perhaps even 47, just in the wave 4 correction. So this is the point, guys. What I'm trying to, the point to try to make here also for like the traditional stocks is that they have overextended so much that a 20, 30, 40% correction, especially in cryptos, is not even going to make a change to the long-term count, but it could happen. Okay, so you have to be careful right now. Now, apart from this, of course, there is a different case, right? And the different case is that, you know, we still have the same case here, triple zigzag. You see, I present them in different ways just to get ideas. It doesn't matter. What matters is that perhaps here is 1, 2, 1, 2, and then 3, we might get that 4 ending quickly, then 3, then we might get that 4, you know, and then we get the 5. And then again, of course, the same principle apply. If we do 5 waves up without breaking to fresh highs, that's going to lead to more long-term potential, okay? And just for the record here, let's not forget there's also that possibility, right? Because we need to always refer to the variations that, you know, perhaps make more sense. And you see I present it as a 5 wave this time, maybe a W and an X, okay? And that might just be something like of a Y here, and, you know, haven't even broken above 79, we might go back to the previous low. That's going to be crazy, right? But look at this, 79%, we just stopped that. What else could happen is we just might continue higher, right? We might just continue here and go up to 90. If we get 90, we might just get a correction here down to 38 and then shoot higher. Our wave 2 will still be here, which means still the bottom supposedly is not in, although the actual bottom is in, because that would be a running flat. And just as a reminder, running flats have a truncated wave C. And if we were to see truncation here, prices could go down to around 26. Again, you know, things are, you understand. We are at a point that you have overextended, and any sort of correction could be very, very, very critical and very damaging. Now, what else can happen here? If we just go in the short term here, guys, right? We didn't top the 90% here, so that remains a W, X, and Y. That means that W and X, supposedly, this is probably 1, 2, 3, 4, and 5. We might get another correction up here and then something like going back to around W. What else could happen, since we have corrected quite a bit, is to get a triangle here. We are expecting the triangle to have 5 waves though, and a W, X, and Y to have 3 waves. So when we're looking at probabilities, one will have already done 66% of it, even like 70. And in the triangles case, we'll have already price action that has already completed around 40% of that pattern. So we have to go with one that has more chances. And for now, W, X, and Y has more chances. However, A, B, C, D, E would also be a potential scenario. But if we do that, if we do see this correction actually ending soon, we might most likely have to go back to this being 1, 2, and then 1, 2. So our wave 2 would be here, right? And then we'd have a 4th wave coming in to compete, not to match actually, with this correction. That would be wave 1 and 2, and again, and then we'll have 3 and 4 and 5. So it would be the 1, 2, 1, 2 rather than the 1, 2 scenario. Okay, so, well, that is it. I hope you enjoyed this video, and we're gonna talk again whenever I'm gonna come up with a new video. So until that, take care and leave your comments. And don't forget, none of this is to be considered as investment advice. It is purely educational.